All right, let's get right into it. Today, we're going to break down an investing framework that pretty much flips decades of conventional wisdom on its head. It's called the 90-10 protocol. You might also know it as the Barbell Strategy, an idea that was really made famous by the risk analyst Nassim Taleb. Now, this isn't just some vague philosophy. Now, think of it as a systematic operational cheat code for your portfolio, one that's designed for both extreme safety and, believe it or not, explosive growth. So let's dig into how this thing actually works, step by step.
But first, I have to ask a question that should make every investor pause for a second. That classic 60-40 portfolio, 60% stocks, 40% bonds, the one you've been told your whole life is the gold standard of safe investing, what if it's not safe at all? What if it's actually incredibly fragile? And what if, by design, it exposes you to the very kind of financial ruin it's supposed to protect you from? So, here's our game plan. We're going to start by picking apart that safe investing fallacy. Then, I'll introduce you to the barbell protocol. From there, we'll dive into its two core parts, what we're calling the shield and the spear. Then, we get to the really cool part, the free lottery trick that makes this whole thing hum. And we'll wrap it all up with the single most powerful advantage of this strategy, something called asymmetry.
Okay, so first things first, we have to tear down the old model. Why is it that the standard advice, the stuff you hear everywhere, actually puts so many investors in a really vulnerable spot? Now, the source material we're drawing from uses some pretty direct language here. It calls the 60-40 portfolio a midwit meme strategy. So what on earth does that mean? Well, it's talking about an idea that sounds smart. It feels intelligent on the surface. But when you really dig in, it's fundamentally flawed. It's a strategy that aims for the middle of the road, and in doing so, it kind of gets the worst of both worlds. And this right here really gets to the heart of it. Just look at the comparison. On the left, the 60-40 portfolio is a fragile system. You take on medium risk hoping for a medium reward, but you're always exposed to ruin if a real crash happens. The barbell protocol, on the other hand, is designed to be what Taleb calls anti-fragile. That means it actually gains from chaos and disorder. How? By capping your risk completely while leaving your potential reward, well, theoretically, infinite. And that brings us to the protocol itself. So instead of mushing everything together into this mediocre middle, the barbell strategy is all about a clean separation. You split your capital between two distinct, polar opposite extremes. And this is exactly what it looks like. Just picture a weightlifter's barbell, right? You've got these massive weights on either end and absolutely nothing in the middle. That's your portfolio. On one side, you have 90% of your money in what we'll call the shield. This is your fortress of extreme safety. Then, on the other end, there's a tiny 10% allocated to the spear. This is your extreme risk component. So let's build this out, and we have to start with the foundation. The shield is, without a doubt, the most important part of this system. Its one and only job is absolute, total capital preservation. So what do we put in the shields? We're talking about hyper-safe assets. Things that are basically bomb-proof. Think short-term U.S. Treasury bills, which are backed by the full faith and credit of the government, or high-yield savings accounts. Even physical gold. The single most important feature here is that these assets cannot go to zero. It's just not in their DNA. Okay, let's run the numbers because this is where the engine of the whole system really gets started. Let's say you have $100,000 to invest. First, you allocate 90% of it, so $90,000, into the shield. Now, let's assume a pretty conservative 5% annual yield on that, which is totally reasonable for things like T-bills right now. Well, that $90,000 is now generating $4,500 in cash every single year, and that cash is, for all intents and purposes, risk-free. And here's the critical takeaway from all this. The 90% shield makes you totally immune to market crashes. It guarantees you can survive any storm, any black swan event, and that you can never be forced out of the game. It is the bedrock that lets you sleep at night knowing that your principal capital is untouchable. All right, so our foundation is secure. It's locked down. Now, and only now, can we afford to go on the attack. And that brings us to the other side of the barbell, the 10% spear. This is our engine for truly massive asymmetric growth. Now, the mindset for this spear is completely different from anything like traditional investing. We're not looking for a nice, steady 8% return here. Nope. We are hunting for asymmetry. We're looking for what are called convex payoffs. Basically, these are opportunities where the potential gain is just absurd. 10x, 50x, maybe even 100x our money, while our maximum possible loss is strictly, and I mean strictly, limited to that initial bet. So what kind of assets even fit this crazy profile? Well, we're talking about highly speculative plays, things like out-of-the-money options that could pay off huge if there's a surprise market event, angel investments in brand new startups, high conviction bets in a volatile crypto asset, or even buying up distressed assets for pennies on the dollar. These are essentially your lottery tickets. Most will fail, but you only need one to hit big. And now we get to the real magic of this whole protocol. This is the aha moment. This is the insight that connects the two ends of the barbell and turns this thing into a powerful wealth-generating machine. It's what we're calling the free lottery trick. Here it is. The cheat code, plain and simple. Step 1. Your 90% shield does its job and generates that predictable, risk-free yield. In our example, that's $4,500. Step 2. And listen closely because this is everything. You use only that yield money to fund your high-risk spear bets. That means your original principal, that $90,000 bedrock, is never, ever, ever at risk. You are literally playing with house money. So what actually happens when you run this system over time? Well, it creates this beautifully simple and incredibly powerful set of outcomes. And this brings us to the final and most important advantage: the pure, unadulterated power of asymmetry. Let's just look at the only two scenarios possible. In outcome A, all your speculative bets are duds. The sphere goes to zero. So what did you actually lose? Just the $4,500 in yield that your shield produced. Your principal of $90,000 is completely untouched. You're right back where you started, with absolutely zero risk to your core capital. But now look at outcome B. One of your bets hits, just one. Let's say you get a 20x return on that $4,500 bet. You've just made $90,000. You've literally doubled your net worth. See the setup? The downside is known and capped. The upside is uncapped and potentially explosive. And you know, this entire strategy really boils down to one powerful idea. The source material puts it perfectly. This is how the wealthy actually operate. They don't gamble the rent money. They gamble the dividends. They build an untouchable fortress of capital, and then they use the cash flow from that fortress to take smart, calculated, high-upside risks. So we'll leave you with this one question to really think about. Take a hard look at your own strategy. Is it just designed to kind of plod along and, hopefully survive the next market downturn? Or is it truly engineered with a system like this, not just to survive, but to win?